Hey everyone, welcome back to Corporate Decoder. Today we've got a report that's a little like a doctor's visit. Everything looks fine on the surface, but once we dig in, we might find some hidden issues. This time we are taking a look at PreAxia Healthcare Payment Systems Form 10Q. It's their quarterly report, basically a checkup on how the company has been doing over the last few months. The report gives us a quick look at their financial health to see if they're thriving or just surviving. This report is for the period ending in February of 2025, letting investors know how they wrapped up the winter. Before we dive in, if you appreciate getting insights from corporate documents, make sure you join our Discord. We have a Discord community linked in the description below to share and get insights about companies. First things first, PreAxia is considered a non-accelerated feeler and a smaller reporting company. Basically, they're not a big player in the market yet, so they get a little flexibility in their reporting requirements. Now let's get into the numbers, but keep in mind that as the report indicates, this is an unaudited version and it doesn't include all the details that would be available in a complete financial statement. Looking at their balance sheet under liabilities, we can see that PreAxia carries almost 2.5 M in liabilities, while only declaring $3 in assets, and their current loans from the bank are at zero. This means PreAxia doesn't have enough assets on hand to cover its debts and also have zero loans from the bank, which is not a great sign. Their total stockholders deficit is nearly $2.5 million. This is another signal that the company is not doing very well. The company owes more money than it owns. Moving over to the condensed consolidated statements of operations, we can clearly see that there wasn't any revenue generated for the 3 and 9 months ended in February of 2025 and 2024. So it's $0 for both those periods. This could be alarming for investors. Zero revenue means they're not selling anything, not providing a service, not making any money. Operating expenses, on the other hand, are present. Professional fees were almost $9,000 for the 3 months ended in February 2025, which is more than double compared to the same period of the previous year. Their net loss per share is $0 for both basic and diluted. It's important to note that this loss is spread across nearly 20 million shares. This is how basic business works. Looking at total net loss, they lost a little over $30,000, which translates to $0 per share, since the share count is so high, which is better than the $94,000 loss registered during the 9-month period of 2024. Switching over to the statement of changes in stockholders deficit table, it just confirms that there were no movements in common stock shares. Taking a look at the cash flow statement, which tells us how the company is managing its money. Cash flows from what the operations generated is only at 380 WAD, 87% less than the previous period. Cash used in financing activities is negative $398, and for investing activities we have zero. It's worth noting that supplemental cash flow information such as tax payment and interest is at zero. It looks like they're really trying to cut back on any expenses. Digging to the notes on the financial statements, this section introduces the overall business operations. PreAxia is in the health payment market, basically creating an online system in the form of an app, allowing users to manage and use their employee benefits and insurance payments. However, there's a big red flag in the going concern note. They say there is substantial doubt to the company's ability to keep running. This is probably due to all the previous factors we mentioned, such as a huge deficit in assets and a lack of revenue generation. The company doesn't have significant cash or other material assets, nor does it have operations or a source of revenue sufficient to cover its operating costs and allow it to continue as a going concern. This statement is there as indication for its investors to stay aware that the company can close at any moment. The company defines fair value as the exchange price. The company also presents a fair evaluation of its financial instruments according to standard accounting practices. The company follows Section 745.30 of the FASB accounting standards codification. It requires recognition of different tax assets and liabilities, but also notes that they may be party of litigation by the time the report is being issued. Now onto related party transactions. This is where things get cozy. Tom Zapatinas, who is the Chief Executive Officer and a Director of PreAxia, seems to have a lot of involvement in the company's finances. Additionally, there are also loans by shareholders to PreAxia summing almost $200,000. Jumping into the stockholders deficit, it shows all kinds of their stock, but it's all the standard stuff. T-Scroll,